Hey there, hope all is well. Back at you with some RTD news updates. And so the theme of today has to do with a new modern day gold rush. And so here's a couple articles I want to share with you from the past day or two in regards to just how the mainstream media is really starting to jump on board with the idea that gold and silver are becoming important once again in monetary matters. And then these several articles here will tell you why. So this first one here is from the Daily Bell. And it's entitled, As Central Banks Make Matters Worse, the Rational Choice is Gold and Silver. And so the writer here basically just goes through some of the reasons as to why. And it starts off with central banks are printing money as though the global economy is in a free fall. Central banks around the world are now spending $200 billion a month on emergency economic stimulus measures. And so just the word emergency economic stimulus measures, pumping this money into their economies by buying bonds. And so it starts off dealing with, Mr. Ben Bernanke, who was the prior Fed chair, and how from 2008 on, it basically just highlights some of the measures he took at what is considered at saving the economy, and how everything he did for the most part was, for the most, basically illegal. And so it lists a couple things here that he knew, some policies he implemented that just goes against monetary common sense, but it didn't seem to, keep people from, thanking him for saving us. And so let me choose. It's about two things. There's two things mentioned in here, but in order to keep it short, I'll let you guys read it. But basically, talks about how monetary policy in and of itself is destroying us, and so that's why people are, starting to wake up to the importance of getting outside of the paper fiat game by getting into metal. So definitely a good article. Check out those two things that I mentioned there. The next one has to do with universal income. And so the writer of this one basically give people universal income to keep them quiet while the global government grows. And so it has to do with the idea that, majority of the wealth of the nation, of the globe, is in the hands of a few plutocrats, as he puts it in here. And how over the last couple decades, the idea of globalization has become more popular, where governments have jumped on board, basically encouraging, becoming more unified in how the world economy operates, to create jobs and to help. They find all kind of ways to spin off, how it can help people. And in doing so, those that own everything are the ones getting richer, and those that depend upon wages are the ones becoming poor. And so the writer here actually is critiquing a book, Global Inequality, A New Approach to the Age of Globalization, written by someone who kind of suggested that the idea of solving this global inequality in wealth is to basically begin giving a universal income, which will, quiet down those that don't have temporarily, while it allows those that have to continue to pretty much rape the global economy with its resources and gaining all the wealth. And so here, it's an article which kind of, doesn't really play towards a universal income, but yet he mentions how governments are soon going to begin really looking into that. Even though it's, it says that Norway and Ontario have already begun the process of looking into it, but he feels it's going to become more mainstream as the inequality increases throughout the next couple of years, and it will probably become a tool in our monetary system real soon. So definitely an article worth checking out there. The next one here for the Market Watch deal with gold futures post modest gains to end 2-year skid. And so here it just basically talks about how, once again, gold in general is beginning to really become mainstream. And so the ETFs, the electronically traded fund, are beginning to really pick up momentum. And so it mentions a couple of different companies here that have seen gains and increases over the last week or two. And so it just goes to show how the gold rush is really up and running pretty strong now in the physical gold as well as in the paper gold with these ETFs. So just a little something to read if you're interested in finding out how people are looking to make money, and as well as speculate in ETFs dealing with gold and silver. So something to check out if you're interested. Next one has to do with the last known gold deposits. And so this article here is from GoldSeek, And it basically mentions how since there's an increased demand in gold, that gold is becoming scarce in and of itself, and how analysts predict that by the year 2035 or so, that all the on the top, on the surface gold that's mineable right now at a cheaper cost will be gone. And so there'll be a need to find ways and find other means of extracting the gold that's deeper in the earth. And so it gave some statistics right here that kind of shows how rare gold is. And it says gold is one of the rarest elements in the world, making up roughly 0.003 parts per million of the Earth's crust. For some perspective, 1 part per million when converted into time is equivalent to 1 minute and 2 years. Gold is even rarer than that. If we took all the gold ever mined, all 1,806,000 tons from the bullion at the Fort Knox, which may not be there, to India's bridal jewelry, to King Tut's burial mask, and melted it all down to a 20.5 meter side cube, it would fit snugly within the confines of an Olympic-sized pool. So I've heard that before. But just to go show how rare it is, it's 0.003 parts per million of the Earth's crust. That's pretty rare. And to say that it's running out or will be harder to find by 2035, that goes to show how precious and rare it is. And so the rest of the article here goes through just some graphs and charts as to how they pretty much, world quarterly mine production and trending down, how it's becoming harder to mine. It gives you some graphs here, and it's basically saying that the gold production or mining itself has dropped off dramatically. As right here just shows that what they're able to pull is just becoming less and less. So anyway, just goes to show how gold will become more and more important as days go ahead, just because it will be harder to get. And so here's another article from Mr. Jim Grant that talks about gold isn't a hedge, it's a investment in chaos. And so here we have Jim Grant, who gives just his take on how gold, for most part, is always considered a hedge against monetary disorder, where now he says we are currently in monetary disorder. So it's something that should be held, and then he lists why. He says Grant noted that 11.7 trillion in negative yield bonds has created an untenable situation in financial markets. This is Grant's monetary disorder he's talking about. So here it just talks about. Sorry about that, my cell phone keeps going off. And as part of this disorder that Mr. Grant's talking about, he talks about the next expected phase from markets is the introduction of something like helicopter money or infusions of cash into the economy directly, financed by the central banks. And so this plays into the fact that last week the Bank of England cut its benchmark interest rate to 0.25%, the 666th time that its central bank has lowered interest rates since the financial crisis. 666 times. Wow. Interesting. So this is just what's going on. This is the disorder that Jim Grant is referring to when he talks about, we are currently in it now. And so gold isn't a hedge. It's an investment right now because of this disorder. So definitely something to check out. Articles below. Next one, last one, from the ETF Daily News. This talks about Financial Times. We're at the beginning of a multi-year bull run in gold. And so the writer here basically just, mentions the bull run has begun, and he gives 3 reasons as to why. The analyst outlines 3 factors at play that he says will fuel a huge bull run in gold. 1, monetary policy. Because of quantitative easing, negative interest rates have been game changers and have dramatically distorted the valuation of government bonds, breaking the theoretical ceiling in prices, squeezing the shorts, underweight positions, and so on and so forth. Next one, credit markets. The bubble in government bonds and duration has incentivized risk-taking across equity and credit markets. And the next one is fiat currency limitations. Interest rates are already at record lows. Asset purchase suffer from the law of diminishing returns. So 3 reasons why, the bull run is coming. And so he just basically talks about, why it is. Last little piece here is a little graph showing how, things are gold, GOD is going up. So here's what's happening in the news. The bull run in gold, all eyes are on gold and silver. in my opinion, for the next, next several months slash years because of the monetary disorder and chaos that the central banks have put us in. So definitely, here's what's happening in the news. Hope you enjoyed it. Share it. Give me a comment below. Love to, hear your thoughts. Until next time, have a good one.